Now, this deck was actually a deck presented by XBRL International to the Office of Management and Budget in 2007, 2008, aiming at convincing them to go to XBRL. And now we are in 6 years later, 7 years later, and what happened is that they are, with the Data Act, seems that they are going to go in that direction, but took a long time. And so I actually just have a few of the slides here that I wanted to show you. And this is the one that I showed you before, is the value chain. And basically the idea is information flows this way. And what you are trying to do is reduce the inter-process delay, okay? And to do that, you actually have to reduce the intransitivity, reduce the obstacles to transmit data. You don't have to punch it. And so what you want to use is reduce the time that takes information to go from the other and make it reasonably kind of flow automatically. That's what you want to do. And so basically what you needed is a way that one computer understands the other computer without Jeremy has to rekey his transformation. Sorry, Jeremy, just to wake you up. And so what would you do to resolve that problem? You would create a language that the two computers can talk to each other and the thing can be done automatically. So that's what the idea of XML is, extensible markup language. And really, XML is not a language. XML is a standard of intercommunication. The word we use is interoperability. But actually, an implementation of XML becomes a language. And as I explained to you before, you have a datum, and you have tags around the datum explaining the datum. And this looks like an ERP too in my usual design, but that's not what I mean. It's one piece of data and tags explaining it. And as I told to you before, there are over 300, maybe 400 dialects of XML that work for the different industries. Any industry that you may have worked most likely will have an XML dialect. And the dialect in our domain is called XBRL, Extensible Business Reporting Language. And this dialect is aimed at transmitting paper-based financial statements looking like electronic statements. So it collects data at the level of the balance sheet, income statement, funds flow, and tags. And and comments and notes at the end of financial statements. That's the level. So if you have a corporate information system with an ERP, and this, I'll put a big disk drive here, with an ERP, a lot of detailed information, and that detailed information draws into some subledgers that draw into some ledgers. Okay, so you have very detailed, semi-detailed, less detailed, and then you have the financial statement level things. You actually are only transmitting the financial level things. So what I always say is XBRL, the way we have it today, at the FR level, financial reporting level, is just paper and electronics. And the way you think about it is there is a box here, any computer, this is another box here. And instead of Jeremy being in the middle, rekeying this printed information to put it here, what you have is a dialect in the middle that allows automatic computer transcription of information. And the generic dialect XML is like HTML. Okay, it's a second generation W3C dialect. W3C is World Wide Web Consortium. And it's basically designed to create interoperability between the computers around the world. And you get a transmission. The header of it say XML. Say, oh, I know how to deal with this. And then the underheader of this say XBRL, say, oh, I don't know XBRL. But because I know how to do with XML, I go and find XBRL somewhere, and then I can interpret that data. And in simple terms, is in this website is IBM's instance document. Instance document is your financial statement represented in XBRL. And my computers are able to pick it up and slap it into an Excel spreadsheet without any manual intervention. Okay, maybe you need to point to it and bring it in, but even that you can write a little spider that will do that for you. Okay, so you don't need to rekey the information. Sounds trivial, but is a earth-shattering change. Because from one second to the other, the information goes to the value chain to the information value chain without having to be rekeyed. And so you really have kind of two levels. You could transmit the information of this level here, detail or subledger, and that's XBRL GL, or you could transmit this. This is XBRL FR. And this thing here is what's required by the SEC for the largest, not the very small, publicly traded companies. Is this clear? So XBRL is a standard of data transmission. And there is code that can create these reports. And I'm going to show you how it looks internally, just for you to get, people like to see things. So within the company, at the transaction detail, you could use GL. That's not required. Externally, you are required, if you're a large company, to publish the same information you publish in paper in XBRL. Now, people have asked me the following question: why don't we use just PDFs? Everyone knows what a PDF is, correct? Why don't we just use PDFs? Can someone answer me that question? Yeah. That's right. PDFs are very untractable. Although there is a lot of good software now that takes information out of PDF, but it's not consistent. And actually, Adobe made a big mistake not making it more tractable. Because if they had made it tractable, they own that market. And owning the market of interoperability would make them a lot of money. Although they don't do too badly. Yes, Namita, you had a question? Yeah, it's the same thing. It's difficult to extract. We are doing a project for the GASB. Does everyone know what the GASB is? Government Accounting Standards Board, as opposed to FASB. And it's the Financial Accounting Foundation, FAF, and they have two branches, the FASB and the GASB. The FASB, you know what it does. The GASB is in charge of standards for municipalities and state, not the federal government. Now, the FASB has enforcement, has standard-setting powers to the point that the SEC punishes if you don't obey the FASB. The GASB, no one really enforces it. So it's kind of a weaker brother. And they want to go in this direction, so we have been working with him. You didn't have Hussein Issa in the class, do you? Hussein is one of the PhD students, now it's on our faculty, and he's running our GASB project. And what we are trying to do with that is create a vision of electronic reporting at every municipal level. There are maybe 5,500 municipal organizations, 50 states, et cetera, et cetera. And we are trying to create a way, but we really don't want this. We really would like this. So the whole thing detailed. And the Data Act will be pushing governments to open more what information they give. Now, this is not as easy as it seems, because the Data Act is federal. The GASB is municipal and state. They don't talk to each other. Okay, now, want to think about, you think that Brazil is an underdeveloped country? Yes, I guess. But first, they play better soccer than the US. Second, Brazil actually this year is starting countrywide, and they have like 50,000 municipalities, a countrywide standardized reporting for all municipalities, entities, and etc. And they are being required, and there is one balance sheet, and the aim is to consolidate at the federal level. Now, that's pretty hot. Okay, so I had the guy, Bruno, who runs it, come here to our conference like November and show what he's doing. And so other countries are doing interesting. You're going to see the end of this deck, I'm going to talk again about the Dutch, and you'll see how interesting their effort is. Okay, continuing here. But guys, please ask questions when the doubts come up, because this accumulates the knowledge. Okay, just imagine here. Okay, Ginger, I have had it. You stay out of garbage. Understand, Ginger, stay out of garbage. Okay, now what Ginger understands is just a few extractions out of that. Okay, what are we saying is that people examine financial statements and they look at earnings per share. That's it. The other things, they pay very little attention. So let me ask you the question. How should, if that's really true, how should financial reports be? Only reporting earnings per share. That, so I'm going to tell my son that Inya doesn't think that he's a people because he's a researcher. Just kidding. He's good looking. He runs marathons. If you come to my office, see a picture of him without a shirt. He's 185, but he's half Chinese. Oh, you're married. Sorry about that. Trying to arrange a date for my son. He's getting married anyway. So, but that's actually an idea, and I think this is exactly what I was trying to draw. Is we have you ever really thought the following, that our reporting is one report for everyone? Meaning the model, the financial reporting model of the world is one financial report for everyone. Is that good, bad? What do you think? Ping. Okay, so what the point you are making is, depending on your information needs, your reporting should be different. And why is not that way? Hey guys, can you put names in front of you so I get to know everyone? I'm now at the thing. I know David, and he's also playing. He changes seats every day, every day, so I confuse me. But can I confuse him? Easy to, not easy to confuse him. But the model is there that you prepare one thing, supposedly simple for everyone. Now, is it simple? Is a financial? I think Inya's model of reporting earnings per share, that's it, is simpler. And that's what people look anyway. Dave. Drill down, that's the word that you should use, but yes. And why wasn't it like that? when the FASB came into existence 20 years ago, or when the APB came into existence 30 years ago, or when the first SEC reporting was required in the Security Acts of 33, 34. So technology has to do something with reporting. I like Inya's idea of Excel reporting basis. Okay. So the reason I want to, that's what I was expecting, say technology wasn't there. And so technology and reporting has a very close relationship. Yes? Yeah, have it. Is that the Egyptian point of view? Uh-huh. Corporations went in a rampage in the Security Act of 33, 34 because they were required to issue statements, income statements, and declare their income. You understand this perfectly. You're in a very profitable business. Okay? Tell everyone that you're making a lot of money. Everyone goes to your business, creates competition. So earnings is a secret thing if you can keep it that way. Now, what is the countervening effort to this? Mohammed, what pushes you to disclose as opposed to holding tight? Yeah, that's the economic motivation. You don't want to disclose. That's the one side of the story. But why did it finish up that they had to disclose? Rich? Come on, Rich. You can figure it out. Why did it? Go ahead, Ali. Yeah, but what were the forces? One force is businesses say, no, I don't want to disclose. But the force was so strong that they were forced to disclose. What was the other side of the story? Yeah, that was the enforcing thing. But what was forcing the government to issue the regulations? Absolutely. The big crisis where, what was it, 30% of the U.S. population didn't have jobs. People were miserable. They were starving in the streets. And so what prevailed in this country? The starving people in the streets screaming, or the companies wanting to make more money? At that time, the balance went, companies making more money lost, and the public win. I told you about EBI, Enhanced Business Reporting. Okay, 2 or 3 crises. Okay, it wasn't as deep as 2008, but 2 or 3 crises. Enron, WorldCom, etc. Bad reporting. So EBI, we are going to change the reporting schema. But not enough people were starving, not enough people were screaming, so they didn't change it. Correct? It's the forces of economics interest. And the other thing is the lobbies are much better now than they were in 27. Much more powerful lobbies. And, congressmen get reelected every 2 years. And, when congressmen started being reelected, there was no such a thing as email campaigns and public media and etc. So it wasn't possible to influence elections, influence votes the way it is now. So it kind of goes this way, etc. Now, the reason why we are in this kind of opaque method of reporting and method of reporting to one type of reporting, but in reality you do much more than one type of reporting. There is this rule called the FD Act, the Full Disclosure Act, that requires that the same information is given for everyone. But in reality you create reports to your banks, to your insurance companies, etc. You can't give different reports to different stockbrokers or analysts or etc. But you issue hundreds of different reports to different people. And don't tell me that those stay quietly with the bank. The information goes everywhere. Information has economic value. Someone will whisper it to someone. Yeah. I'm not saying that it's good to have insider trading or anything like that. All I'm saying is that markets tend to want to be efficient, And if information have economic value, someone will benefit from it, even if they break the law. Correct? This is very many nuances of information diffusion. But two factors here. One factor is economic rebalancing. Poverty against profit, the 1% against the 99%, that kind of thing. The other effect is technology. You can do things that you couldn't do before, or you could do it before, but it would be very expensive. Meaning you could do drill downs, you could do everything before, but you would have to have someone doing it manually. Get Jeremy there doing it all manually. And that's why in the old days, the government came out with a new report. It was very expensive because you have to hire 10 of you guys, MBAs, to prepare the reports every time. What's the situation today? Government demands a new report. What happens? I'm simplifying, but what happens? Come on, guys, think on. You go ahead, Inya. I liked what you say. Yeah. No, but my question is, in the old days, any new requirement of the government required people to be hired to prepare that report every quarter, every year, whenever it's going to happen. What happens today?
You can just modify the product.
Exactly. I wouldn't use those words, but exactly what it is. What today is then government requires a new report. Companies like IBM, large companies, have some accountants deal with that and program it in Excel or program it in C or program it and put it in the systems. But actually what's happening at that moment is Oracle, SAP, Microsoft are writing programs to do that. And the incremental cost of producing that program is close to zero. That is an interesting argument because you say, then the government can ask whatever they want, it won't cost very much. And that's kind of true, kind not true. You have to kind of discuss the story. There is a social cost, and if you produce a lot of information, some of it is good, some is not bad. Good. There was a hand up there in the right? No? Okay. Michael, you had a hand up. Oh, he has a bad idea of senators. You know, senators are not as bad as congressmen because they only get reelected every 6 years.
They're allowed to do insider trading, and then they're also allowed to do this. They create literally, they see the public.
No, they are not allowed to do insider trading. They are not allowed to do insider. What you defined as insider, what they called insider trading is trading on information that other people don't have. They are allowed to trade. They are not allowed to do insider trading. If you catch a senator doing insider trading, you know what happens to the senator. He goes to jail. In Brazil, you have immunity. When you are congressman, you have to be judged by the Supreme Court. Okay? So it takes 20 years, so you finish being senator, you die before something happens. Okay? But here is, if you break the law as a senator, you go to jail. In Russia, it's like that? Are we surprised? No.
In Belarus, we have presidents since 1995.
Same president? That's good. He has tenure, like me. Like me.
Every election that he makes.
Does he have to go promotion, associate president, full president, or like me, P2,
When
distinguished
his
president?
election goes, he press everybody to vote. Otherwise, he's gonna take the jobs away. This is the big fact.
At least there is stability, correct? Well, let's not do politics here, but I find it amusing. Yeah, when we wanted XBRL to be implemented, we went to Congressman Issa, not Hussein Issa, our faculty, Congressman Issa, who was chairman of the Committee on Financial something, and we spent a lot of time educating him on what at that time the chairman of the SEC called interactive reporting. And when he got educated, and I don't think he had a business on this line. I thought he was pretty clean on the whole thing. Issa actually pushed this legislation to his committee. Okay, Michael, I'm not saying that some congressmen don't act on just their pocket interest, but I think some of them do have public. You know, sometimes you work on your economic good and at the same time have the public good in mind. Okay, you know, they are human, correct? You know, it's very difficult to judge people on one dimension. You know, there is this guy who was chairman of a large company, and he gave himself a $19 million bonus. And when he was called about this, he said, oh, the chairman of the audit committee approved it verbally. But the chairman of the committee had died 6 months earlier, so there was no way to validate it. The same guy was giving millions and millions of dollars to New York charities. So, you know, people have different dimensions. You can't judge people in one dimension. Okay, professor is really mean in one thing, but is very nice to his children. Okay, so, you know, it's, yeah.
The charities were just tax shelters.
I don't think so. I don't think so. But back to the to this discussion. What actually we have here is economic and technology facilitation working at the same time. What technology makes is changes the balance of the economic story because it becomes cheaper and easier to do. And many things were not done in financial reporting in the past because it was not possible to do it reasonably. And now they can be done, but the economic pressures are not in that direction. Meaning, what has happened in the last, let's say, last 150 years is that there were economic cycles. And the economic cycles are getting shorter and shorter. You know, we had a crisis in '87, a crisis in 2003, a crisis in 2009. So one is coming pretty soon, correct? Hopefully after you get a job. You know, in the last crisis, PwC had to postpone entry by a year. They hired people and then they had to wait for a year. So, I don't know. It's a question. Ask Professor Sanella. He'll know the answer. I think his son was in that batch. Okay. No, they didn't get paid. They only started employing a year later. I don't know if they could collect unemployment or not. That's what I don't know. I bet you they could, but I don't know. But that's kind of happened. And what I heard several legislators saying that this is the moment to put new legislation in that tightens the screws. He says there is nothing like a crisis to allow better regulation. And what I say, this is true, but what I think that they do wrongly is that they don't get rid of obsolete regulation. And obsolete regulation holds progress back. Okay, so let's continue with this XBRL story because this is the economic background to it. Okay, and so we are going to the INEA model here of reporting. Okay, blah, 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 earnings per share, this thing, profit. Profit is this thing. And most studies that look at how investors decide, 80 to 90% of the investors never look at a financial statement. They use what's called the surrogate method of investing. They get advice from someone, either from his friend Ricardo, like I do, or from your broker, Bob, or you read in the newspaper a hint. Okay? You know, GoPro went public yesterday. I managed to sneak in and got insider price because my son-in-law is a very famous mountain climber and he does commercials for GoPro. Okay, that's really bad, correct? Insider prices, I always oppose it when I had a chance. They didn't break the law. Okay, but I offered a certain amount of money. They only gave me 10% of it because there are too many people interested on getting the stock. Okay, but that's kind of how the economics works. And ask me the following question: did I look at the financial statements of GoPro? Would you have? I talked to my son, and he said, I know nothing about GoPro. I know about banks. Don't bother me. But my daughter, who is married to the guy, she said, I am going to invest on it. So I thought it was a good idea. And anyway, I have a GoPro. You know what a GoPro is? It's fantastic. You know, you put it, when you go diving, you hang it on you somewhere, and it kind of follows your diving. When you go skiing, it kind of follows you. You don't have to use your hand. It's really a very nice thing. And they sell all these different clothes for the GoPro, something for diving, something for flying with it, and etc. You can glue it to your helmet. It's pretty cool. And they sell more GoPros than any other camera in the United States at this moment. So my daughter consulted her buddy, who is an analyst in an investment bank, and she said, oh, they already maxed their market. And I said, do they sell in China? Do they sell in India? No. So I didn't look anymore. So that's it. Yeah. No one reads statements. And why no one reads statements? Why? Boring. Very boring. You guys don't understand it. Imagine them. If I ask you the question, how many of you read an entire financial statement in this year? I don't think more than one or two. How many of you read the entire financial statement this year? I'm keeping my hands down. How many of you read the financial statement this year? Yeah, I did open one and give a look. And, you know, in the class. I am interested in footnotes. I like footnotes. Because I think footnotes sometimes has information. But my friend Bob went to MIT with me, and he's a broker, and his results are fantastic. He reads financial statements deeply, very, very deeply. So there must be some information there that I never really realize is sitting in there. Okay, and that's why when I'm critical of financial statements, I limit what I say. But these are the trade-offs here on financial reporting, and I think I was clear about that. Now, the thing that they say about XBRL is that because it's transmitting the information easily in the value chain, decreases the barriers of entry for analysts. More people, and this is really a chart of coverage of companies. Do you realize that a large number of companies don't have any research coverage? And there are some companies that have one analyst that covers, and some of them more than one research analyst. And the argument with XBRL become much easier because you get the data easier. Okay, I showed this to my son, and he said, yeah, that's probably true. Okay, this is actually from Bank of America. And what they said is that in order to give a loan, they took 11 days to prepare information, and then 1 day to make the analysis and decision. And with XBRL is exactly the opposite. Okay, I'm not going to do this. Okay, this is what I want to, the main thing I want to show you on this slide. There is one more on this deck. Okay, this is your cash. The item is cash 200. Okay, so the value is 200. That's the item. Okay. So it gets a name. This goes in the taxonomy. Cash equivalents, and short-term investment. cash equivalent, and short-term investment. Then the other thing that you define is how it's going to be presented. So this is the computer name. This is how it's going to show in whatever you're transmitting. Now, it could be this way too. What is this? Guys, don't have to take notes. You have this deck. Comptant and comptant équivalent. French. What is this? Today, very appropriate. German. What is this? I think Dutch. What is this? Does anyone here? Where are my Chinese students? They are all studying for a midterm, correct? So what language is this? No, it's not Yiddish. Okay, and what language is this? Ah, Ping, where were you? What was this one? This is Chinese? This one? Japanese? This one? Russian. Can you read this? Okay. What? Ukrainian? Oh, I learned something right now. Okay, so what are we saying here? Is that once you have the computer name of the thing, you can have a table with the financial statement any language you want. Okay, so that's nice. The other thing you can is what we talked about before, tell what accounting standard it refers to. And what's going to happen is that the kind of main type of accounts are going to have a standard. But remember, the thing that people keep forgetting is the name of the thing is GAAP. What are the words around GAAP? Generally accepted accounting principle. What does it mean, generally accepted? Thing issued by the FASB, is that generally accepted? No, it's promulgated. Someone told you you have to do. But why do they use this terminology, generally accepted?
Small companies don't necessarily adhere to all things.
That's your current interpretation, you're correct. But this comes from a long time, meaning over 150 years of GAAP. Why generally accepted? Because there were no standard setters, and so when in 33, 34, the Security Acts came out, they had to say how you need to report. So say you need to report inventory and profit. How? Well, there is no rules. So generally accepted, how usually people do it. And in reality, you look at the whole universe of accounting reporting, the promulgated part is not very big. And there is a lot of things in the many industries that companies just tend to do. And that's what's the word generally accepted. People that don't know accounting think that there is a rule for everything. And there is not. Particularly when you start looking at accounting industry by industry and event by event. And that's why the number of footnotes is expanding substantially, because you progressively are being obliged to report and don't know how to report it. So you finish up reporting it in a footnote. Particularly because there are wordings in GAAP now that say important things must be reported, but doesn't tell you what the important thing and how to report it. So, you get a good writer, you get Jeremy here to write it up. Okay, and what Jeremy will do is say, oh, I have to report this extra issuance of stock or this particular event. So what he does, he goes around and tries to find other company that reported it and tries to emulate that wording. Why is he going to do that? Why is he going to emulate wording, not create his own wording? That's what is the consequence, but what's the cause? Because the other company didn't get sued. So you decrease your legal liability by staying with something that has been generally accepted. Now you're kind of starting to understand the undercarriages of this reporting model, that you are learning the rules, but you're not thinking about the total. Now, let's go a little bit further on this thing. And other things that remember I told you taxonomy is chart of accounts on steroids. This is the account. This is a relationship. This thing here is cash equals currency plus deposits. Currency plus deposits. cash, cash equivalents, and short-term investments. Okay? And this is in US dollars. This is 2004. This is budgeted, not actual. And then, in order to avoid mistaken entries, has to be larger than 0. So this is a definition of an XML item, in this case, an XBRL item. Okay, now this is what I wanted you to look a little bit. Stop. Okay? This is the cost of goods sold. This is how actually on your computer the code looks like. The element is cost of goods sold, overhead, okay? The name is this thing here. The type is XT, substitution group, balance equal debit. And the value is 287, so somewhere there 287 will come in. Here it is. Cost of goods sold, numeric, context, CO, this is the value, and then these things with a slash in front say, this started here, finished here. So this is a lot of verbiage for one little number, correct? That's why I was telling you before that one number becomes a big thing. So it's not efficient in storage. Does it matter? No, it doesn't matter. Storage is very cheap. Very, very cheap. And you know, companies like Google and Microsoft are now giving you cloud storage practically free. I don't know if you just saw the announcement. Microsoft announced that they are giving you nearly limited cloud storage in their cloud because they figured out if you use their cloud, use their other services, trying to tie you up. So it really doesn't matter, but it does matter a little bit. Why does it matter a bit? Because putting this data into a database is very clumsy. So you basically strip out all the verbiage. You put this thing in the database and put a header, say this is cost of goods sold. And then in some other field you say this is 1984, this is budgeted, and et cetera, et cetera. So there is this conflict here. And of course, this is actually Eric's argument for XBRL GL. And basically what he says here is FR covers this. We need to cover this. And I'm going to repeat an explanation I gave you before, maybe a little bit clearer, is why SAP, Oracle really don't like the idea of XBRL GL. Because you have the relational database here, you have applications here, and this belongs all to Oracle. Okay? Now, you put information being transmitted here in GL. You can do this. Not use this part of Oracle, and have a transmit information in GL, and buy J.D. Edwards or PeopleSoft applications here. So you will not use the product because you now have an easy way to transfer data automatically. So it's all economics. People with very large franchises in a software domain want their standard to be adopted, not someone else's, so they can control that environment, they can improve them. Microsoft tries everything possible to force you to use Word and Office and et cetera, because if they make it easy to interchange, you are going to buy products from someone else, not from them. Michael?
They just adopt a more transparent standard, a better, XBRL, Oracle.
Who should adopt it?
Should undercut XBRL.
Yeah, but they will make it much easier to competitors to steal part of their clients. That's what they're afraid of. And it's always true The large dominant players in a software market try to control the standard for economic reasons. You know, we're trying to get everyone to do audit data standard. Oracle and SAP don't want it. They come to the meetings, they look, but they don't do absolutely nothing. When we ask them, they say, get 5 of our large clients to tell us they need it, and we'll do it. So we got 5 of the large clients to say they need it. They didn't do it. Why? Because they don't want interoperability. Now, Microsoft did it. Why? Because they're up and coming in the ERP market, and they want to get in there. So they are participating with Dynamics. And so Eric actually created some examples. And this is actually, I like this chart of his because thinks the way you think. Okay? Trigger, what starts the thing? A source document is represented electronically. Then, what happens in accounting? Journal, the document is entered and posted. This is traditional stuff. Is someone there keying in? And then what happened? The journal entry is created, and then those journal entries of the different subledgers go into the general ledger. Okay? Then they go to, and then they go to post it to the GL. Then there is a history journal just for you to keep the transactions. And then you consolidate at different levels, sub-consolidation, consolidation, etc. And then finally you create reports. Again, this is the allegory I talked before. In ERP, this is everything you do. This is your financial report. You need all this level of detail. Remember, I had my transactions here. You need all this level of details to run your business. You need this to report. And that's why this is not very informative. And you guys did a very good job 2 classes ago or 3 classes ago coming up with measurements of the non-financial information. And of course, that's what ultimately should be reported. And the next thing that Eric does in this thing is shows this is actually a schemata of GL and XBRL FR. This is the conduct of GL. This is FR at the little tail end. Okay, and then he had 2 examples. One Japanese company was willing to do an experiment GL. That was Wacoal. And they actually created a GL schema using Oracle. And then, as I told you, this was the Office of Management and Budget. They had a little example at HUD, and they show how HUD could do it, but HUD never did it. Okay, and then, now this one I want to just go back to this. Do you remember the story that I said about the Dutch initiative? The Dutch initiative is basically bringing together 3 of the ministries to require the same things and simplify dramatically what they require. So it was a major e-government initiative of the Dutch. The Ministry of Justice, the Ministry of Finance, in a joint effort intended, this is passed, to reduce the administrative burden, focus on 3 reporting chains: reporting for taxes, reporting for annual accounts, and economic statistics. And basically they brought those things together. They claimed that the savings in the Netherlands was 350 million euros. Actually, now they say it is larger than that. Okay, and so that's about it for this deck. And I'm not doing clickers on this one. I just wanted to ask you these 4 questions. What is XBRL? Someone give me a definition fast. Like this, I can't hear you. You read me the title. You didn't tell me what XBRL is. It's a standard for data transmission, in particular for financial statements. Okay, a standard of interoperability for financial statements. The second one, What are the problems and the benefits of XBRL? Corinne, you want to write? Absolutely. You don't take advantage of the technology. Why did I go in this big rampage about talking about these things? Because I was saying, here it is. You're having a golden opportunity to enhance the reporting's value chain, and you didn't do it. You basically stayed with the way you reported it. Now, I used to say this in the meetings, made me very unpopular with the XBRL folks, but in reality, there has been some gains. The one gain is it's more democratic. Everyone can easily get the information, and people are progressively getting it. As much as the companies hate XBRL, they do hate XBRL. It's kind of getting more diffusion, etc. One thing. And the second thing is like it allows to do things more frequently and easier. So progressively, there is a pressure in that direction. Where are we in current development? XBRL version 2.1 is out. Maybe 10,000 companies reported it. Is it inevitable? Some standard of electronic reporting is inevitable. Is it XBRL? Most likely, because once the government put things in rules, it's very difficult to get it out. Now, they are talking about changing the SEC rule to a thing called inline XBRL. And inline XBRL, just to simplify, basically you have your financial statement maybe in PDF, and you have things linking to XBRL in the back. So really submitting not two financial reports, one financial report and then its version XBRL, but one with XBRL built into it. The Internal Revenue Service is called the Inland Revenue Service in England, actually requires that at this moment. So there is kind of a buzz around that this is going to be happening. I'm not totally sure if it's really true. But one thing you see everywhere is progressively governments, because of cost, are going into electronic reporting, meaning do things in paper when everyone else is doing in everything else electronic makes no sense. So governments are embedding, and many of the revenue services are getting things in electronic format. Okay, so this is the XBRL story. I think is enough to get you started on XBRL. Okay, so we go back to my slides. And instead of using my evolution of auditing slides, I'm using my ISACA slides. This is a presentation I did in Australia and here too about continuous auditing. And it's very similar in the beginning to what I showed you. I just wanted to show you some slides that I didn't have in that deck. Okay, and so you already seen these things, so I'm going to stay there. But this one I haven't showed, and it's conceptual. I would like to talk to you. What we do today is this: assurance of a financial report. What the auditor publishes in the financial statement is, I examine the balance sheet, income statement, etc. of XYZ company, and they fairly represent this company. So two accounts could be materially wrong, but if they are in a reverse order, one goes in this direction, the other goes in this direction, they're outside, and the statement is correct. But the accounts are wrong. Now, in general, this doesn't happen, but potentially it could happen. And so what you do today is report assurance. ASAC suggests that, say, we shouldn't be issuing financial audits directly of the statement. We should really certify processes. The accounts receivable process is correct. The accounts payable process is correct. That's what you should be doing. And we issued a thing called SysTrust. And there were actually two products of the ICPA, WebTrust and Systrust. And these were auditor products. In addition to selling an audit of the financial statement, you would create a trust certificate of a web page, and you would create a trust certificate of a particular system. This thing was created 2001, 2002, 2003, and died because the AICPA was trying to cash in against other countries and other institutes, and people didn't want to buy it. But the Canadians actually kept this thing alive, and there are Systrust and Web Trust statements, and actually they were issuing Systrust instead of calling Systrust was a SAS 70 opinion. A SAS 70 opinion is something like a predetermined procedures opinion. You hire an auditor to do certain things. It's not a financial statement. And now they rewrote SAS 70 that actually is very much like a trust opinion. So this is really oriented towards looking at one particular computer process and say it's trustable. And it's particularly important for outsourcing situation. You are a web provider, cloud provider, and you have hundreds of clients using your cloud. So you want a certificate by the auditor saying that your security is good. So that's what is kind of oriented. And actually, there was one version of Systrust, which now has a different name, and you're going to learn it later on, that actually is used by these providers. And that's kind of very alive and etc. And what I actually think is going to be happening is that emphasis will progressively turn into datum. And in the data, there'll be an opinion on, will be like one parameter of an XBRL tag. So this is cash, this is this, this is that, and this is certified to be reliable at 97%. Now, this is just an idea. Don't take this very seriously. Okay? But I think that the tendency of certification is going to be towards the data elements. You're going to hear more about this. This is just an introduction of this idea. We already done this. We talked about CCM. We talked about CRMA. I didn't show you this chart. This chart is, remember we had continuous auditing at 3 elements. Continuous data audit, continuous control monitoring, and CRMA, continuous risk monitoring and assessment. And CRMA is viewed this way. You monitor, what is a KRI? Do you remember? Key risk indicator. What is a KPI? Key performance indicator. So you're monitoring process risk, environmental risk, and remote but very large risk, like the economy will collapse, like your nuclear plant is going to explode, etc., Fukushima. Things that very low likelihood of happening, but close to the situation of Fukushima, there were some signs that they could have detected and done some things to ameliorate. And the idea is that the auditor will monitor risks exactly the way I described to you. This is a model for risk. This is a risk measurement for today. If it happens that the risk changes a lot, then you go into remedial processes. And the remedial process, changing audit plan, reallocating audit resources, and working with management. My new chart has a whole thing like that for working with management on decreasing the risk. And we have 2 projects going on trying to do that. They're incidental. And then I already did all these with you, but this one I haven't got. Oh, this one I wanted to show you. I mentioned this to you last time. I said the King report dealt with what I called multiple auditor organizations. And this is Urton Anderson work at the University of Texas. And he calls it a web of assurance. And say you are doing Sarbanes-Oxley, you are doing Basel, you are doing internal controls, you're doing internal audit. you put them together in a web of assurance. And actually, this is not very easy to see. This is actually PwC's view of this, 2012. And this is something that they always talk in a lot of discussion with internal audit. They talk about lines of defense. The first line of defense is management oversight. The second line of defense is the staff functions, risk management, SOX review. And the third line of defense is external audit and similar type of things. Independent, objective assurance, internal audit, external audit, ISO standards, regulatory audits, and other independent reviews. 3 lines, huh? International standards organizations. What they do is they issue standards for all kind of quality type of things. And so it was very big for a while to go with this ISO standards and etc. Of course, ISO could easily issue a lot of the accounting standards, but they don't. Okay, and this is King's report, principle 3.5. The audit committee should ensure that a combined assurance model is applied to provide coordinated approach to all assurance activities. This is very different from the US. And they are very ahead because other environmental circumstances in South Africa forced them to do this. You see, this is all the PwC integrated assurance from South Africa. Okay, already done this. Okay, let me just find the slides I want to show you. I'm going to start from here. This is what we were discussing yesterday when we stopped. Okay, this was the AT&T continuous audit we call the CPAS project. Main conceptualization is this idea of audit, analytics, standards, and alarms, and the measurement method. What is a metric is what we are talking an actual measurement of a particular KPI or business function. What is an analytics is a rule that you apply on top of it. What is a standard is the model that you use to compare against. You know, in my original work in continuous auditing at AT&T and several other projects, we really were focusing on measuring actuals. But now, with ERPs and technologies in place, those measurements exist. And companies actually use those measurements for management. Now a lot of our work is developing better models. I called it standards for people to understand better, but in reality it's models. And what is very difficult is to predict what actually should be happening to compare with what actually happened. I'll give you an example which might be interesting to you. You have some phenomenon, and this phenomenon usually has a perennial growth. It grows. Then it has macro cycles. Economy always goes in macro cycles. So, perennial growth, micro cycle. Then, within the business, there is a seasonality factor. You sell more in November, December than you sell in January and February. So, there is this kind of within-year seasonality. Correct? And these all, and of course this repeats every year. Okay. And so when you compound, the sales are a whole different number. And you have to extract these grand factors to see if there is a variation. And then there is the situation of the abnormal sale. What does it mean? You sign a contract with Walmart. You know what that means? That you're going to sell half of your production to Walmart. And instead of your margins being 11%, they are going to be 2%. Don't look at me so surprised. Is this abnormal? No. When you go and sell to Walmart or you go to sell Costco, you sell huge volumes but they squeeze your margins to that. And if you have good production processes, you keep those margins and you make a lot of money because instead of selling A, you're selling 10A. But if your processes are not so good, you could go into a loss very rapidly. But these are the components. So when you have a surge of sales, the surge of sales goes to your process, goes to sales, then cash, then receivables, then technological support. So your final sales number is a compound of a series of things. Perennial growth, macro cycle, seasonality, and one-time effects. And depending on what business you are in, it might be even other components that you put in there. Like we put correlates in, saying like, how is the industry doing? As a way to pull out little peaks that we would like to vary. So the work has been these days very much concentrating on thinking of models. Because we are already reasonably good at measuring, pulling things out. That said, I go back to what Paul was saying yesterday and disagree with him again. Data is always dirty. Very, very seldom you find data that is really clean. And so, although I said that we don't focus so much on the measurement part, we have this whole, maybe half of the effort is always around cleaning up the data. But remember, don't clean out so much that you are losing your effects. You're just kind of regularizing the data. For example, you have, remember yesterday I was talking about this consolidated payment process. Some of them have certain variables, other ones don't have those variables. And exactly you have to deal with that in one way or the other. Okay, so that's kind of the theory of continuous auditing. Oh, one more thing. I talked enough about alarms. Yesterday, actually, I talked to you about 4 levels of alarm and etc. The other next thing is how do you capture the data? And I described to you what was a pretty cumbersome method of collecting data. Remember, they created electronic reports. The electronic report was shipped to me, and then I scanned. Today, they call that screen scraping. You use software to pick up what's in your screen, and then you take the letters and numbers out of there. As opposed to the nice way, which is going to the databases and extracting the data. Why would you screen scrape as opposed to extracting the data from the databases? It's a good thought, but that's not what it is. It's because there were 5,000 change requests in RCAM, and if we ask another change, another extraction, another report, would take 2 years to get it. So we wanted to be, and also they were very wary of those guys at Bell Labs extracting data into their databases. Very, very wary. At Bell Labs, there was this tradition. Bell Labs don't exist anymore, but was this tradition of post-mortem. And post-mortem is you finished a project, we finished this project, and they brought 3 scientists from other fields to evaluate what you did. And they obviously loved CPAS because the business unit was state-of-the-art. But they creamed me about measurement, about screen scraping. They said, this is ridiculous, go to the databases, this and that and that. This was in 89, 90. 20 years later, when I stopped working at Bell Labs, maybe 22 years later, they had 20 or 30 projects screen scraping. Why? Because you don't have to go and interfere with the processes. And so if you have a secondary way to collect data that is nearly anonymous, it's better in many things. Now, if you have a big operating system that runs millions of transactions, you don't want to do a secondary data source. But this is something to be taught a little bit. You see, this was the slide I showed before, audit by exception. And this is the slide I showed before, and I stopped yesterday here. Okay, and remember this is what the architecture was showing yesterday, and these are 4 large data centers, electronic reports, the filter is the screen scraping that I'm describing, put it in Ingress database, relational database, a very non-traditional Bell Labs because I bought a database instead of developing my own. They had several of them inside, but I wanted a commercial one. And then we use HTML kind of thing with actually hyperlink type of thing for showing the displays. I'm going to show you a couple of displays. I didn't have it on other deck. That's why I changed decks. And this is actually what's done. It was the operating system of Sun Workstation at a time called News. And this is actually a diagram. There was a little globe there where you press the globe and it told you where your hyperlinks went to. So you can, instead of click down the stream, you could just click directly down the stream. Actually, I think that's better. And some websites have site maps. Have you ever seen those? And you click on the site map, and then you get the deep click. I like that better than etc. And actually, now, be ready for this. You need to think about this for a second. Don't you think this would be a wonderful way to show a financial report? There you could have it, let's say, transaction details, subledger, general ledger. Except for one thing, this is not a cube. So you couldn't reorganize it by product or by geography. But of course, you could put a little click on top of there and say, do it by geography, do it by product, do it by geography and product. Ah, that's nice, correct? Will this ever happen in your lifetimes? Certainly not in mine, yes. Absolutely, I've seen that. But you see, what you're talking, Ping, is about this, not this. In Dynamics is an ERP. You know, it's like ERP is trying to serve middle-sized companies. Accounting systems are trying to become ERPs. They are fighting for that middle territory. Of course, Dynamics wants to go all the way to the top. Microsoft bought 4 different PC types of softwares and are enhancing it. And I've seen also things on the labs at Microsoft, and what you're describing is just the beginning. They have all kind of fantastic ideas of display. And I looked at that and said, wow, I wish annual reports were like this. Okay, we actually, I don't want to go to the extent of Inya talking about an earning per share reporting thing, but I would like to go something that you have 5, 6 level of reporting. You can pull your reports along different cubes, and you can filter. I just want my Indian sales in Bangalore of software on March 31st to June 5th. Very narrow thing. And then you could relate, you could expand, etc. That's what you want. And by the way, that's what you do with relational databases if you're doing a research analytical project. And what you want to be able to do with financial data. And the other thing is that is essential is expand to what you are talking. Expand to non-financial data. Before Jonathan sells a product, Jonathan has to buy the product to sell it. Jonathan needs to have the facility for selling it. Jonathan might need the internet infrastructure to sell it. Jonathan might need to have a web page to sell it. Jonathan needs the background, which is hiring Amazon to use the structure of Amazon to sell that. All of those things need to happen before the sale. If we are only booking the moment transaction happening, you're only catching the tail of the elephant. And of course, you don't manage very well with that way. And you don't tell your investors very well what you're doing. Now, if you go to the other parts, there are all kind of other problems with that kind of thing, but there are rewards for that kind of thing. So that's the way to start thinking of an expanded reporting schema. Now what this thing had, this is an alert. And the alert, this was kind of a bill print situation. And you formatted, you had 1,000 bills. 2 of them had errors. You knew what happened to them. You formatted 998, but you only printed 988. So 10 disappeared. That created alert. Probably level 1 alert. And what's interesting about this is this kind of things. Number of transactions. I was very excited about this when we developed this. I thought this would be a revolution in auditing. 25 years have passed, no one pays any attention to it. So that tells you how good my predictions were. Now, this is actually the real fact that I told you before. This is an analytics. And analytics always thinks about equations. Actually, Kazuo in our team, industrial engineer, he actually developed analytics mainly in graphics in his Mac. And it was very interesting how people think in different ways. Kazuo didn't really have a way to enter in the system. So what he actually did, he transcribed the numbers of those reports into his Mac, typed them in, tried different reports. The Mac created graphics better than we could do in the new system, and etc. And once he was happy, I actually hired a couple of guys to program it in. So he did it by hand at night, because he liked to work at night. PhD from Stanford in industrial engineering. He did the way he wanted to do it. Japanese guy, had his own ideas of doing things. And so this was one of the graphs. And I don't know if I have the slide here. This actually showed in a weird way. And we had to regraph it, visualize it until we were happy. And because this was a cycle of billing, and it was 20 bills a month out of 30 days. And weekends, they didn't really work. And so the graph looked. And so we got rid of the weekend, squeezed it in, did a couple more things, and looked like this. And look what happened here. 16, 17, 18, weekend. 21, 22, 23, 24. Now, when we go to the 25th, look at that. So at this point, we closed it. We called up operation and said, close the system. And the rules was that they had to obey us. But they had a fit at this, and I told you what happened next day, next Monday. They stopped our data flow, so we had to have a big argument, and then we started the Prometheus project. But actually, we discovered what happened here. Remember I told you, the switches created tapes. The tapes were mailed into the data center. The data center read the tapes in, put it in the databases. They brought the tape in, read it in. Then they put it in the wrong place, they read it in again. So the same records went in twice. That wasn't bad enough. The guy had a little bit of programming background. He multiplied every field by, he realized what he had done, multiplied every field by -1 and read it in the third time. And what happened is that negative user numbers, double charge, this was a horrendous mess. And the system had enough filters that blocked something. So very few bills went out. And it would have gone, none of them went to the client because they accumulated mailings by day, and we picked them up here. We stopped all the mailings and etc. That was a big, horrendous mess. But it was the only one that we had to stop the system, and this is where we learned a lot of things. The thing that we learned most out of this was operations doesn't have the same data that internal auditors have. They need to create their own structures. And that's why was really the first instance of continuous monitoring versus continuous audit discussion. And this is actually, before we doctored those graphs that I showed you, this is actually how they looked. And we couldn't catch a lot of things. So one thing, and we are going to have Abdullah here talking about visualization. Abdullah is going to discuss some of the issues about how to show data in an analytic situation, how to use the data in an analytic situation. Okay, the other thing that we discovered with CPAS is that the auditors really loved it was for instruction. What we had these ALA expert system explanation panels And what we did when we developed the graphs, what we actually did is we went and talked to the engineers that had developed it. And one of my colleagues, Fern Halper, was the one that I said PhD in oceanography. Her PhD dissertation was the layers of the Gulf of Mexico, okay, how hot and how cold was related to geography. And she was an expert in spectral analysis because she had to do spectral analysis on the levels of the Gulf of Mexico. And so Fern actually put a lot of things in our models that had some spectral analysis. And actual spectral analysis is a complicated way. Yesterday I showed you the Wacoal graph with spectral analysis in the right. You basically break things in spectrum, and you look at the frequency of events in the different spectrum. And so she did a lot of that spectral analysis type of stuff. And what her job was, learn this word, knowledge engineering. What is knowledge engineering? Oksana is my expert on this part of the biller. So I'm going to sit down with Oksana, and I'm going to capture her knowledge. I think the 28th or 30th of July, we are going to have Denise here, or Abdullah. Who is going to be, Denise or Abdullah, talking about expert systems? Denise. And what Denise is going to tell you is that I mentioned yesterday the P-card story. We picked up an expert in evaluating procurement card, and we captured her knowledge into software. And actually, that's what Fern was doing. She was capturing the documentation were volumes about this big. Impossible to pick up things out of there. So what we did is we talked to experts and designed a flow chart and asked them, what are the rules that you use to capture information? What are the rules that you use to stop a process? What are the rules that you use to detect a failure? And we tried to program these things. And Kazuo would hear these rules, Fern would write them up. And in the process, we captured this kind of explanation of systems. And these were more popular than our system, really. The auditors loved them, and the operation guys, when they got their hands to it, they loved them too. Okay, so that was, let's just kind of recap here what we talked step by step. We talked that continuous auditing had, we defined it, 3 base levels. 1, risk monitoring, the most popular data analysis or continuous data audit, and the third one, control monitoring. Then in the data analysis or data audit, we basically looked at the data streams, compared them with a model, and if the difference was very big, you create an exception. On control monitoring, we created a baseline of what the control should be and took an extraction of the control profiles every night, compared once against the other. Are we clear here on these things? Yes? And then on the CRMA, was basically trying to create a hierarchy of risks and measuring the risk. I'll tell you, we are just incipient in CRMA. We haven't done a lot of projects in CRMA. But one thing we learned, or several things we learned. The first thing we learned is companies don't have a very good taxonomy of risk. They don't really know what the risks are. But companies have all kinds of organizations dealing with risk. Itaú has more people working on risk than in auditing and control. But of course, in a bank, the risks are very real, meaning how many people are going to default on their credit card. You have 27 million credit cards outstanding. You have a big risk there. And then you have insurance. How many people are going to claim death insurance or catastrophe insurance or et cetera, et cetera. That's another risk. And so around the financial products, each product has their own set of risks. How many people are going to sue the bank? How many people are going to do this? These are all schema of risk. So in the bank is a little bit easier to do this. You know that banks need to keep a capital. And this capital according to Basel 2.0, now 3.0, is contingent on the portfolio of risks that they have. So if you have a particular asset with low default rates, you have to keep less capital then you have a very high risk portfolio item. And so for banks, this is reasonably easy. Other thing about risk. Do you know that all companies are required to write for the 10K statement what are the key risks? Did you know that? Yeah. So all companies, first, you know what the 10K is, correct? No, I've seen this very, very quiet, blank. You look at David and you go, what is the 10K? And it doesn't say a word. Companies disclose their financial report. Okay, that's for the investors. But actually they are required to file with the SEC a 10K. The 10K goes into a storage area called EDGAR. And EDGAR is the SEC container of financial reports. And you file 10Ks, 10Qs, 4Qs, 4Ks. And these are all requirements from the SEC. These things are not XBRL. They are not even XML very well. They have some tags on it, but they are very primitive technology. So a lot of people are making money extracting data from EDGAR. In EDGAR, you have the financial statement, you have quarterly statements, you have a normal reports, you have change of auditor, you have these different reports. You know what? I'm going to make you do some EDGAR consultation here so you learn about EDGAR, or I'm going to show you in class. I'm surprised about the blank looks on everyone. So we are going to do a little bit of EDGAR here. Let me just write myself a note, not to forget. How many of you have consulted EDGAR up to now? Michael goes, what does that mean? No? Yes? Huh? And they say, it's worthwhile having a look at EDGAR and see what's in there, because a very valuable source of information. Remember, if you have an XBRL statement on the website, you can download it. Let's show that to them too, how to do that. EDGAR has 10Ks, 4Ks, 4Qs in there. And so if you want to find information by IBM, you can go to the IBM website, download the PDF of the annual report, correct? You can also pick up the XBRL statement, correct? Yeah, I will, but I'm going to prepare it so we have it nicely organized. And you can go into EDGAR and pull the last 10 years or 6 years of 10Ks. Now, how do companies file EDGAR? Some companies actually prepare the report. Most companies use a filer. They go to a company like W.W. Donnelly, or they go to Web Filings, which we have a project with for the fourth semester students, and they pay these companies to create a report for them to file with the government. And of course, that's a very interesting and difficult thing to do. Okay, so we talked about continuous data audit. We talked about continuous control monitor, a little bit about CRMA. Now, let's talk a little bit about this idea of continuity equations. This is one of kind of new analytic methods being applied, and basically you have a series of processes. What business is one process after the other after the other. You sell, you collect, you support, you manufacture, etc., etc. Now, I keep telling you that the bookkeeping entry is the first contact of the accounting system with an event. And what I say is that many things before that should happen in order to provision that signal. Now, you continue this reasoning. There are relationships between the different processes. I don't know if you remember, we had these 5 levels. The process, the measurement of the process, and here we had, I said, maybe you represent, I have a slide here, I showed you the slide before, and I'm going to show it again. Here I said, maybe a better way to represent a business is represented by formulas that relate things like that. Like, for example, sales leads to cash. So 0.4 sales leads to cash immediately. Then 0.4 of sales leads to cash plus 30 days, period 30 days. Then 0.1 of sales lead to cash in period T, 60 days. And then 0.1 you never collect. Just kind of giving an example. Do you need to be convinced that there is a time relationship between numbers? No, because you know that the process goes, things don't happen immediately. Even if the accounting can happen immediately, you put in ARP, thing happen immediately, actually the cash only comes in 30 days. Is it always true, or what's happening about the cash coming in these days? Coming closer. Why? Because a lot of the electronic sales are instantaneous, correct? You buy, at that moment PayPal immediately pays your vendor, or your credit card pays the vendor. Is that a total final sale? Not 100%. Some little percentage of it, there is a stolen credit card, there is a failure on the process, etc., etc. So it's not a 100% thing. But the margins of time got closer, but not in large purchases in business. Business still continues doing things more in the more traditional way. Okay, I was hoping there was a slide here. I'm going to show you, just draw it out a little bit. We were talking about the telephone system. And we are talking about the switches here. The switch discharges phone calls into a tape. These days, most of the time, transmission electronic, every 2 hours. Every 2 hours, it gets sent to a database. In this database, it gets allocated to accounts that get billed every 30 days. The money comes in another 30 days or a little bit less than that. So you have this kind of natural sequence of events, and you can write an equation to this. What we did is we did this with HCA, Hospital Corporation of America. They're big. They have 200 hospitals, 200 medical centers, one of the largest employers in the United States. And so we studied one of their warehouses and 10 hospitals. And what we're looking is pharmaceutical distribution of drugs and supplies and et cetera, And we did equations like this, and the Times series explained substantially the quality of the levels. And so what we're working here is in what I represented to you before, the models versus the actuals, and particularly using continuity equations to create the models. Now, I'm going to tell you a sad story. We last month got the good news. The paper finally had been accepted in the Audit Journal. Audit Journal is top journal in auditing, but it's not the top journal in accounting at all. Okay? And so I said I was very happy, smiling, and I went to look when I wrote my first draft of that paper. Make a guess. This is June 2014. September 2003. 2003. And I love HCA. HCA is very dear to my heart because, it's a little story, is always good. We founded the car lab out of kind of a story. I spent 6 months in '97 at KPMG. And so remember, I thought there was this period between when I got to Rutgers and '99 that there had been no publications in continuous audit except my article. And when I talked in the ICPA, no one was interested in continuous audit. So I went to KPMG, and my idea was to start a continuous auditing program at KPMG. So I spent 6 months there. We designed the program. We designed what we were going to do, etc. The day I stepped out of KPMG, they canceled the program. The day, it was literally the day, and they sent me an email. And so I was working with a guy who was an ex-academic and was head of the research there. And of course, I wasn't too happy. And he had the bad luck of next week being on the same airplane flight with me, going to some conference. Okay, so I really badgered him. We used to have lunch every day, so we're good friends. And he said, we canceled it because you're going to piss off a client. Okay, they were afraid to lose a client because we were going to try to do this. And I mean, this is ridiculous. We have 15, 20 organizations work. I never get one too upset. So a little upset pushing them to do things, but not to. But they were afraid they lose a client, and so they stopped it. But then they told me the following. They said, if you find data, because of course all our work is data bound, we'll fund your work. And so I did everything possible to find data, very difficult to find data. Actually, Rani Hoitash, one of our PhD students, had to do a dissertation that emulated data. For peer review type of stuff, we had to pick it up from CompuStat because we couldn't find the data. So when the .com thing exploded in 2002, 2003, I bought a bankrupt .com to use their data. And the judge vetoed it, said, no, you can't pass the data. And then I get this call, maybe a week later, from HCA, saying we are under government supervision because of bad Medicare, Medicaid billing. It's kind of a delayed prosecution agreement. You know what those things are? The government said, I'm not going to sue you for criminal laws, but we have to put an interventor in. And, many companies, KPMG had been under that before, after that, etc. But you need to fix things up. And so the idea was to do a continuous audit to monitor Medicare, Medicaid fraud, but they didn't have an R&D department. So they said, we saw these articles of yours and this continuous auditing thing. You want to do it for us? And I said, you have data? They said, yes. So I didn't even charge them any money. I said, we'll do it immediately. And they gave us the data, and Alex, our Professor Kogan, spent easily 8 months to a year cleaning their data up, making it usable. They had these big data warehouses. And the fields were not what they were supposed to be and etc. And then we did this continuity equation stuff, and the results were fantastic. The predictions are great, much better than we have. We pull out abnormal payment like this, fantastic. We couldn't write it all up because some is protected by privacy. And this is more touchy because it's HIPAA, meaning it's the medical security thing. So it was very touchy. HIPAA didn't even exist at that time, but was getting there. Okay. So it was a great, great model, worked very well. They were very happy with it, but they were more happy with the cleanup we did on the data warehouse. They twice restructured it, then with the predictive work that we did. The predictive work, I think they only thought we need to do this for the government. We do it, pay lip service to it. So they never really used this thing. And they were bought up by one of these hedge funds. And they are kind of being being restructured, so to speak. There's hedge funds take out all the money out of it and they resell the business. So they are doing that. But they gave us this data. And 3 months after I got the data, KPMG came good. They didn't even argue. They just went to half of the foundation, half the company funded, and they told me at that time, we are not really interested in continuous auditing, but we are interested to keep an eye on what you are doing, because maybe we'll get interested soon. So we've done this now 10 years. We actually have a 12th meeting of the Car Lab directors in November. And they funded us for about 10 years, not asking us what we are going to do, just looking at it. Last 3 years, 4 years, they actually wanted projects like a survey or this and that. And now we are developing their methodology of the future. So this is very substantive work. But was very interesting. And at that time, we had HCA data, and progressively one more company. And now you hear that a lot of companies have data, and some of them I can't even tell you the names. So there is even more data to that. Okay, and this one I showed you yesterday. I just want to recap for a second what I showed you yesterday on clustering. First question to you, why do you do clustering? I'm not doing clickers, just asking you, why do you do clustering? What's the purpose of clustering? Exactly. Find groups that are similar and pull out outliers to that group. So I said 2 things you do clustering. 1, you look for entire group that might be weird. And the second thing, you look in a group, things that are outside the group. Okay? Now, pull some things together that I talked prior. Same kind of story. You have big data, a lot of transactions. Of big data, you have your database. Your database has a lot of data. And then, of your database, you want to pull exceptions. For auditors to sample and examine. What did we establish yesterday? That these exceptions typically are too many to examine all of them. So what you want is what Hussein calls exceptional exceptions. And one method to pull exceptional exceptions is cluster things and pick up outliers of the exceptions. The other method is what I showed you to Youngbum Kim did, and I might show you more details on that, whereby manual entry, duplicate, violates controls, and then has several attributes that are negative, finish up the ones that have many of those negative attributes, are the ones that are your potential exceptional exceptions. So this is kind of an equation of probability of fault, but with weights of 1. So you have probability of fault equals a function of of x1, x2, x3, and each one with a probability of 1. So you gave the same weight using the Venn diagram to each one of them. And this is what Youngbum Kim did in his dissertation with MetLife data. Okay? Now, what Hussein did, he ran behavioral experiments with auditors, and he changed these parameters from 1 to, say, manual entry. the probability is high, the weighting is 0.4. Duplicate entry, the weighting is 1.2. The weighting is 1.8. So instead of having a single weighting schema, he came out with multiple weighting schema. So they see the plot thickens. You are doing more intelligent type of selection of transactions. And I like what Hussein calls this exceptional exceptions, because I like you have this long list of exceptions, and you are choosing the more important ones. Now, all of this nature of evidence here, this nature of evidence is traditional accounting evidence. We now have developed methods that are a little bit different. And this is not done yet. This is what we're thinking about doing. Maybe she will do something on this area. Is adding other parameters to this. One thing we can do is create X4 here and use Euclidean distance between the center of this cluster and that particular variable. So if that variable is a manual entry with 3 standard deviations distance from the cluster, it's more dangerous than if just down here. So in addition to traditional evidence, we might add a parameter on Euclidean distance in clustering. Other one. From process mining. Everything done today in sampling exception, auditing, is basically transaction-oriented and a little bit control-oriented. Now, I talked to you before, in process mining, you have a process here, and transactions flow to the process. If you take the whole population, you finish up with about 5-6 paths. 5-6 paths explain most of the transactions. What we found in our process mining study, about 300 paths, actually more than 300 paths. So actually, maybe as a variable is if it follows an unorthodox path, it might be a weighting in here. Now, it's not easy because what weighting you are going to use? Are you going to use 1.2? Are you going to use 2.0? You're going to use 0.1. And of course, there is only one way to verify it. Or at least maybe there are other ways. But one way to verify it is start tracking those transactions and get a percentage of those transactions that you find that are faulty. But you have to understand that you are collecting evidence in different forms, and these are pretty non-traditional. Even this whole thing is non-traditional. Reminding you one more thing that we said last time that is worthwhile mentioning is this is your transaction flow. You create a filter, probability of failure. And you choose that the things that are probability of failure larger than 95% are positives, and the things that are less than 95% are negatives. What do you know? Remember, Inya, what we said here before? That within the positives you chose, some are true positives, and some are false positives. And among the negatives, some are negative, or let's call them true negatives, and some are false negative. What is a false negative? It's a positive. It's a true positive. Okay, not to confuse things here. Now, what happens if you change from 95 to 97. Absolutely. Now, of course, if this filter is a better filter, you're not changing your coefficient, but is a filter that these measurements are better, your ratio, two positives and et cetera, changes. So obviously you are desperately aiming to create a model that is the best possible. And of course, the best possible, how do you do it? By improving the quality of your models.